Okay, it looks like we're live. Hello, everyone. I'm not going to say good evening because it's different times everywhere around the world, and we get viewers from everywhere around the world. Just like to thank all of you again for your interest in the channel. And for those of you who enjoyed the channel but haven't subscribed, make sure you do because I think there's something like 41% of you who watch the videos but don't subscribe. That would help. And just to let you know, Clive and Rafi Farber are joining us later on, well, in about 10 minutes or so. The title today is All Is Not Well with the Financial System's Plumbing. Well, that's the repurchase market or the repo market in the US. And yeah, there's news, like it hasn't really been publicized that much, but I saw the article in the FC that Fed officials actually met with the primary dealers. The primary dealers, of course, are the major New York financial institutions, and that includes foreign institutions as well. They're part of the primary dealers too. So that's what we're going to talk about. There's some other things that I've got here to talk about the UK, the upcoming budget, and also China, and the fact that even the FT now is saying that China is buying more gold than the official numbers tell us. And we're also going to cover silver. There seems to be yeah, the war for natural resources is intensifying, and China is putting a lot more controls on the silver that leaves the country. That should continue to help physical market because we all know LBMA and COMEX are paper bucket shops. So let's say hello to all of you. And we'll be answering as many questions as well, of course. Dutch Libertarian is here. Hio Silver's here. Andy Lee 4364 from Italy is here. Mark Sneed is here. Rudy is here. He's down here on the floor right now. He'll probably jump up in a minute up there. Uh, Kroikai is here from Holland. Word 9189 says hello everyone. Native American 9049. Not watching. Well, yeah, we don't really need that kind of if you don't take that off, I'm going to have to remove that Native American. I'm going to remove it. There you go. We don't do that kind of commenting here. 10 Lausett from Edmonton, Alberta in Canada. Boxer Mom, good afternoon from Kent, Ohio. John Baxter, 189, I'm seeing UK budget could proper rock the markets. Well, I think the markets have already started rocking with what happened with the announcement that they backtracked on the income tax increase. But I agree with you, though. Chris Conman, 684, says, Hi, Mario and Rudy from Atlanta, I guess, ATL, yeah. WNA Tim from West Texas says hi. Jeff Hopper from Michigan. Lana B 4103 from Kansas. Endurorama. Hi, Endurorama. Just AB Esquire. Greetings from the Scottish borders. Hero Nimi from Poland. Ruby's 200 from Mississippi. Savik Schuster from Kazakhstan. Wow, that's great. Nice to see you here. Must be fairly late in Kazakhstan right now. A few hours ahead of the UK. D.E. Middleton from Douglas in Louisville. Hi, Douglas. Tom Dank from on Toronto, Ontario. Steve Montplaisir, thank you for your super chat. All is not well. Epic understatement, Mario. Well, yeah, I guess so. It isn't well, is it? I mean, I think this whole financial system we have is such a house of cards. It's like a drug addict that really needs a hit very soon, or else it's going to go into convulsions. That's what it feels like. Lantura from says hello from Israel. Helpless Hawk. Hello, Danny in Frinton. Ridge Runner. I'm Aaron. Let me know if you ever want to sell Rudy. Yeah, he's not for sale, Rudy. Rudy, come here. Why don't you come and say hello? There you go. There he is. Are you for sale, Rudy? Nah. Uh, who else have we got here? Frank Peter, good day, Mario and Stackers. Yeah, stacking, that's the thing to do. Word 9189 from New England. Mark C from Billericay in Essex. Yeah. John Harlan from Portugal. Castro Verde in Portugal. Mark Y. Marcock says hello, everyone. Rudy is in contract negotiations with Mario. Yeah, he said if you don't get me more silver, I might have to find a new owner. You want to get down now? Good boy. There you go. Rudy needs a gold chain, yeah. Tony Lubbers from the Netherlands. Is there a bank run coming? Well, I think they'll stop that. They'll just print to save the banks. But I could be wrong, or if there is problems with the bank, they could do a bail-in like they did with Cyprus, and they could basically say, "Oh, you can either, yeah, you can take equity in the bank. Let's say you had over 100,000 euros in there. They'll give you 100,000 worth of shares that aren't really worth that much." Yeah, I mean, that's why I personally think, I mean, I have, how can I say, deposits with, I don't like to say it's money because it isn't. I have deposits with banks, mainly because for taxation and for running things and but I take out as much as I can. The other day I bought the two new 2026 sovereigns. They've added silver to the sovereigns. They used to be alloyed with copper, so they looked reddish, but now they're going to be yellow looking. I haven't received it yet, but yeah. So I always try to get more gold and silver. It's just the right thing to do, in my opinion. There's someone here from Chile, Reinhard7572, Puerto Varas, Chile. Hi, Clive.
Hello, good evening, Mario. Good evening to all my friends here.
Yeah, yeah, I'm sure there are a lot of friends. Yeah. And he who buys what he does not need steals from himself. Oh, you got some proverbs coming up there.
Yeah, yeah, it's the my younger son's computer.
Okay. Handel says, what does Rudy think about all of this? Well, Rudy is a bit of a stoic. He tries to stay above the fray. and just focus on what's important for him. What do you think? Do you think that's a good strategy, Clive?
Really is a smart doggy.
Yeah, yeah. Stay the course, Jack Bogle. Uh, David Morrissey. Hi, Maria. I assume you mean Mario, but anyway, I want to ask the question if the stock market crashes, will the gold and silver miners also crash as they are linked to the stock market? Um, Back in April, they didn't. So they might initially, but eventually, I don't think so. I think a lot of the money in the stock market, general stock market, will move to gold and the miners. What do you think, Clive?
Well, when something loses its value rapidly, like a country going bust or a stock market going down, there's nothing which can escape it in the short term, but because everybody reallocates. So there will be selling of silver and gold in a stock market crash, and also the gold mines will go down. But what then happens is the reevaluation of where people want to park their money. So now they've sold, they've got the cash, and they have to put it somewhere. And I think that's when they, on the recovery, that's when you start to see where the money's going to go. And my bet is that the amount of money which will head in the direction of gold and silver will be increasing. I just spoke today with the girl who works at a major gold selling company here in Switzerland, and she said they've got more customers coming in than ever before, net buyers. So
Yeah.
there's strong interest in gold at the moment. So I think money will go to gold.
Yeah. After the gold rush, says Mario, some of my quarter sovereigns are rose gold. Does that make any difference? No, it doesn't. It's just a matter of look. I mean, they've been minting. Oh, sorry about that. They've been minting, excuse me, they've been minting the rose gold since, I don't know, since 1979, 1980, or the 70s. It's just that it's a different alloy. The reason there is another metal in the sovereign is because used to be a circulating coin, and it still is to some extent circulating. It's bullion. So if it was 24 karat, it would be too soft. And But it doesn't make any difference as long as it has the same amount of gold, right, Clive?
Yeah, you remember the old Western movies when they get a gold coin, they're playing poker, he'll take the coin and bite it because it's soft. But of
Yeah.
course, the correct way to do it is to put some alloy in it, like silver or copper or something, to make sure that it's no longer soft.
Hi, Rafi. Nice to see you.
Hey Mario, hey Clive.
Hello, Rafi. Nice to see you.
You too.
You
How's
didn't have
everybody
you
doing?
didn't put your tie on for Clive.
Oh, well, yeah, well, I did last time, but he wasn't here, so
Yeah,
yeah.
doesn't
And
matter.
no
You
need to
missed
be
it. You
formal.
missed it. You can never go back now.
So the title today of the live stream is about this, and I'm gonna share. I don't know if you've seen this, Rafi, but I think let's see. You've seen it, haven't you, Clive, about the New York Fed? New York Fed convened meeting with Wall Street firms over key lending facility. So this wasn't planned, this meeting. It's just that they were meeting at the Treasury, all the Wall Street banks, the Fed, and they met on the sidelines because the repo market is kind of clogged up, and the Fed has had to step in. So the spread now between repo and the Fed funds rate is like quite high, and we're starting to see maybe the same problem we had in 2019 when the Fed had to stop QT and then start not QE again. And I think John Williams from the New York Fed recently said that they might have to start QE. They're going to stop QT at the end of this month. So, Rafi, what's your view on this? Because you've been following this quite a lot, repo market.
Yeah, I actually did see this. One of my subscribers sent it to me, and I checked it out. One thing that I don't understand is I looked at this is one of the things I started writing about it for my post that I should publish tomorrow. One thing I don't quite understand is I know that the the standing repo facility. Basically, if there's not enough money for repo and the Fed can has a standing facility that they can print whatever cash in exchange for treasuries for anyone who needs it, why is it that interest rates would be rising if they can just print money for anyone who needs the
Yeah.
repo? And obviously they can't for some what reason they call friction or maybe some regulatory whatever that they can't get around. The standing repo facility just doesn't work. But I don't understand the technicals as to why it
Yeah.
doesn't work.
I think the rate that's been going up is the normal repo market, not the Fed standing facility, and that's why these institutions are using the Fed because the Fed can lend it to them, I think, at a lower rate. Is that it, Clive? Is that the way you see it?
Yeah, I mean, the whole point of the repo market is when a bank needs liquidity in a hurry, it can deposit with the central bank its treasuries and get in return some cash. But when banks do too much of that, that can be seen by other banks who can observe it. That can be seen as a sign of distress or worry. So I don't know. I don't quite know what the problem is here. The fact that interest rates on these repos might be a little bit higher. Is that indicating that someone is wanting to deposit and borrow money from the Fed and can't get it, or I can't quite get what the problem
Yeah,
is?
I think though, I think it's because the repo market usually doesn't involve really the Fed. It's financial institutions bringing, let's say, a hedge fund coming to JP Morgan and saying, "Here's 10 million treasuries. Can I borrow?"
Ah,
That's what it is.
oh, okay, so it's not the
It's
Fed at all
yeah.
setting
So
the
the
rates.
Fed
Okay.
has stepped in because the private repo market is kind of people are losing confidence in each other. But and that's what happened in 2019. But someone's asking here, Dutch libertarian, when hyperinflation or debt default? I personally think that there won't be debt default because that's, well, at least in the US, because they can, like Alan Greenspan said years ago, he was sitting next to Austin Goolsbee, who is now, I think, Chicago Fed president. He said, "We can always print. We will never default." And Austin Goolsbee looked at him like this on TV. So, what do you think, Rafi?
So I think there's going to be a
Default
technical
or
a technical
hyperinflation?
default. No, we're definitely going to go with hyperinflation because if we go to default, then that's not just one default. That's a default of everything because once you have the first default, then whoever is owed that money can't pay back whatever he owes, and then you start a domino and everything falls. And then we go back to $35 an ounce eventually after everything's cleared out. But once we're talking about that, it's not really that much of a difference if whether gold is $35 and everything defaults or whether gold is $35,000 and nothing defaults. The question isn't even, what like at what number will trigger hyperinflation because the hyperinflation will basically happen when no one with gold wants to exchange it anymore with dollars. So what's going to be the final print number for, the final price of gold before the point where no one will sell any for any dollars? And then we'll be in hyperinflation because once you won't accept gold for dollars, you won't accept anything and you can't
Yeah.
sell anything.
Yeah, I guess we're in the last 1% as well, of the value of the dollar versus gold. I
Yeah, so
think,
when we're talking about the final stages, there really is no difference. The difference is only on the way there. It's slightly different whether you're going to have a hyperdeflation or a hyperinflation, but in the end, it's the same result.
yeah, so I've touched upon this a few times, this chart. So the on the left, it's the chart of the one gold mark in paper marks. And to me, this chart looks really similar to the one that's evolving right now. And of course, this ended in hyperinflation in Germany in 1923. And I think it started in the summer of, I think summer of 22 is when it broke above this line. And by the end of 23, like you said, no one wanted to part with their gold, for like I don't know, 1 trillion or 1 quadrillion marks. It's ridiculous. But of course, this chart here on the right is it's a bigger fractal, but it looks very similar. And we started, I guess, we took off March, I think, or spring of 2024. So it might take a few more years because this one here is this is over a shorter period of time. So it took a year and a half. So this could take maybe a little longer. So Clive, what's your view on deflation, that collapse, or hyperinflation? Even though, like Rafi said, at the end of the day, both are the same. You're going to destroy the currency no matter, even if you have that deflation as well, because that is going to, the other side of that is the currency.
Well, the path we're on seems to be unstoppable. I suppose the real question is uh, what precipitates a sudden rush to get away from cash and into anything else. And you never know what events are around the corner. You know, it could be some war or civil unrest or some geographic event. You know, the world is full of surprises, black swans, we call them. A black swan is something which does happen, but the world is not expecting to happen. It's one of those very, very rare events which are supposed to happen once every 10,000 or 100,000 years. But of course, there's so many events which can happen. Sooner or later, something does happen. And over the last 50 years, when I've been investing, we've seen a fair smattering of black swans here and there, things which were never supposed to happen. So I think it's only a question of time before we do have some major cataclysmic event which will make people run for cash. And, one of the likelihoods of that is the fact that the interest on the US government debt is climbing very, very fast. It's climbing as a percentage of their tax take. So we're currently at 18%. The Congressional Budget Office says we're going to get to 22% in a couple of years. That's 22% of everything they collect in taxes will go to service the national debt. And that's just a couple of years away. Stretch that out to the 2030s, and we could be in a situation where the interest payments on the national debt are close to or even potentially exceeding the totality of the tax take. And then you're in a situation where it's spiraling out of control very, very fast. But we won't get, I don't think we'll get to that situation because I think sooner or later, before we get to that, people are going to panic and say, why am I lending to a government which can never repay? And of course, it's not just the US government; it's all G7, all the Western governments are spending way beyond their beyond their means.
Yeah, yeah, no, I agree. There's a super chat here from Jace Little. Thank you, Jace. Love your content, Mary. Since March 2020, the Fed has set the reserve requirement ratio for US banks at 0%. Yeah, I know. They don't need to keep, if you put $100 in there, they don't need to keep even a dollar. Banks are not required to hold a specific percentage of deposits. This will create German marks 2.0. German Reichsmarks, I would say, because the German mark from post 1948 is was actually quite sound. But yeah, that's just a matter of technique. What do you think, Rafi, about that? Do you think that's what's going to cause the hyperinflation?
If it's, I guess we're technically in an infinitesimal reserve banking system, and if you're going to make the fraction infinitesimal, that's where we are. No, I don't think that's going to cause it. I think that's one of the requirements, because the reason that they would eliminate reserve requirements is because they don't want banks hoarding reserves. They want them loaning out, which means that banks don't otherwise want to loan out money. They would rather just not loan it out and hold it there, which means there's not enough demand for the dollars, and that's the impulse for deflation, for falling prices and debt defaults. But you know, in the final stages or even in the semifinal stages, you have a constant war between deflation and inflation. The natural forces want debt default because all the debt is worthless anyway. And then what the central bank does is say, no, no, you can't default because if you default, I see the domino and we're not going to allow that. So they force more spending. But then the the currency compensates by falling and falling in value. So the real value of all these all this new debt keeps falling and falling. I think there's this like famous chart. I know where I saw it. I saw it on Daniel Oliver's last on his speech that he gave to the New Orleans conference. He gave a speech and he had some graphs, and one graph was the value of the German mark relative to the dollar, like we just saw, you just showed us. But then overlaid on it was the total value of the entire market cap of German marks in gold, and it kept falling and falling and falling to almost nothing. Again, it comes down to the same thing. It's just the mechanics are different.
Yeah.
Either the value of all this stuff is going to fall in real terms, and then the currency is going because the currency is going to disappear because it's backed by debt, and the debt falls, and in which case you have a falling value of market cap of currency, or it's going to fall because of hyperinflation, and you're going to have the same falling value of market cap of currency.
Yeah.
I, we're getting, I mean, I think we're getting closer to the printing of cash in the USA now. John Williams, who's the deputy chairman of the Federal Reserve, next in line to Alan Greenspan, and also the New York Federal Reserve president, said I think it was 4 or 5 days ago, that they're very close to buying bonds again. That's quantitative easing. When they buy bonds, they basically print money, that's the liability side, to buy the government bonds, that's the asset side. But basically, that's putting money into the system. And the reason they'd want to do that is to provide, to keep he said to keep short term interest rates down. But actually, the reality is here, it's yield curve control to keep the longer term interest rates down so that the government can continue to borrow money without the interest rates spiraling out of control. But the consequence, of course, of that is there is more money in the system, and of course that money has to find its way into assets. So the day they start doing that will be very bullish for gold.
Yeah, no, I agree. And I've noticed the 10-year yield and the 30-year yield have started to rise again. So they probably concerned about it. Golden Sun, thank you for your super chat. Says, hello, gentlemen from A2, Michigan. A2 is Ann Arbor, by the way. I think that's where the University of Michigan is, Ann Arbor, Michigan. I've got super chat from Chris Conman. Thank you, Chris. He says, when the Fed starts QE again, what component of it affects the gold price the most? Is it just the notion of it starting, or the amount of QE, or the time it is in effect? Thanks. Well, I'll answer it first. I think it's all those factors. The fact that they are starting it again, that means the balance sheet is going to increase, and yes, the amount that they're going to announce will be very important, and how long they do it for. I think they're going to do it until the system implodes. And why do I say that? Well, because if you look at history, especially like in revolutionary France, when they started printing the assignats, they were very how can I say, reticent about printing, because they knew from the Mississippi bubble back in the 1720s that it ends in tears. So they said, oh, we're just going to do one issue, kickstart the economy. Sounds very Keynesian, doesn't it? Kickstart the economy. And they did to some extent, but then the effect goes down again, and they kept printing, and it ended like with people rioting in Paris and burning the printing press. So I don't think they're going to be able to stop this QE.
Yeah,
Fee or Clive?
I would say the day they do it is the day that gold explodes upwards. In answer to Chris Conman's question, the minute they do it, they've demonstrated that everything has changed from the quantitative tightening of trying to control the economy by limiting the money supply into an economy where they're letting it expand freely. And of course, once you start, there's no stopping it.
Rafi?
Okay, I have a little bit of a more nuanced answer to this
Yeah.
question because we did see in the past, like for particularly 2011, right? 2011 was the gold high at 1923 in September 2011. And then around that time, I don't remember exactly when, but QE3 was 2011, right? When they started the 30 billion a month. And then gold went down for like 4 years during QE3 as the balance sheet was expanding, as they were printing money, gold went down. So the way that Daniel Oliver puts it, is that if QE has is if QE is being enacted, he doesn't say it exactly this way, but so I'll just rebrand it in terms of my understanding of him, I guess. Um, if QE is being done during a time of falling consumer prices, then you can re-expand the bubble, the asset bubble, and then you have the same effect. Whereas like people put all their money in the stock market, they put all their money in tech, or they put whatever's moving up at the time, they'll put their money in to store it away, and then you'll have the a deflationary effect while QE is going on. You know, so a more basic way to understand it is like if you print money to stimulate, let's say, oil drilling, and then all the investment is going into all oil drilling, and then the prices of oil fall because there's so much more supply because of all the money you printed. The supply of oil can go up faster than the supply of money is spreading around generally. So then prices fall as you're printing money. It's paradoxical, but it only lasts so long. But in the current situation is that price inflation, consumer prices are rising, and the banking system is starting to like get a little bit squeaky, and they're going to need more printing while prices are rising, and that really disturbs the psychology. So this time, I think QE will affect consumer prices a lot faster, and will hurt confidence in the currency a lot faster, and you'll see interest rates starting to rise, even though they're doing QE.
No, I agree with that, Rafi. But one thing back in 2013, that era, was that investors still had confidence that the Fed would be able to stop QE and go back to the pre-crisis level, which was around 800 billion in its balance sheet. I
Hmm.
even remember Ron Paul asking Ben Bernanke, and he said, "Oh, it won't be a problem." And what's her name? Janet Yellen once said, doing QT and going unwinding the balance sheet is going to be like watching paint dry. So I think by now people will have lost confidence, and they will realize, and it could be that trigger, Clive, where people realize that it will never stop, and they will want anything but paper. They will want hard assets, gold and silver. That's the way I see it.
Absolutely. I mean, and I think the if we do go into this hyperinflationary spiral, and I mean, I don't think it's going to get that far. I think long before we get to that, there'll be all kinds of capital controls and restrictions of what you can do with your money. Kind of basically saying you can only spend, probably they'll say something like this, you can only spend digital dollars or only spend the CBDCs. And then there's a limitation as to how much you can put into your digital dollars or how much you can transfer from your bank to the CBDC. And through that sort of control, they'll try and control the inverted commas wicked speculators who are betting against the currency.
Yeah, yeah.
If they try that, there won't be anything to buy. But yeah, I mean, that'll
No, I
happen.
agree. There's a story out as well. I think it's in the FT, and a lot of people have been talking about it. It's about gold. China's secretive gold purchases help fuel record rally. And this is not like the research we've seen from people like Alistair McLeod and others that say that China has over 30,000 tons. This is just this year. Apparently, I think it's Jan Neuenhaus. He's been looking at the customs number between the UK and China, and they've increased a lot. And yeah,
I try. I tried to investigate this, Mario. It's very difficult to get hold of the data, but from what I can find, first of all, exports of 400 kilobars. And this is second-hand information, not me, not original research. You can find that data on the HMRC trade website, where though I couldn't find it, but you could, and also from Switzerland to trade statistics with China. So the export of 400 kilobars to China are quite a high level, and they're saying that these bars can't be destined to retail use because China, on the Shanghai Stock Exchange, it's on the Shanghai Gold Exchange, it's 1 kilo, 3 kilo, and 10 kilo bars. I think they said, whereas the bars being exported to China are 400 ounce bars, which are typically the type of bars used by central banks. So there was that. And the second thing that I came across, which again, it's secondhand information, is there's an awful lot of gold being mined in China. I think it's something like 20% of the world's annual gold supply being mined in China. And there's heavy export restrictions on gold from China. And the question mark is, where is all that gold going? Is China secretly acquiring gold through the back door by buying up some of its own gold production?
Well, I agree with that. I think that's what a lot of the analysts that say China has over, officially over 30,000 tons, and that's what they've been saying. China now is the biggest gold producer. So, yeah, I think, the rest of the world, people that don't follow gold like we do, they think, oh, the US has over 8,000 tons, China only has 2,000. The US is top dog, but I think it's the reverse, actually. I don't think the US has as much as they say. They would have done an audit already, and China has a lot more. And I'm not defending China, I'm just looking at the facts. And I think that's bearish for the dollar. Rafi, you got an opinion on this?
Yeah. I just want to know how do they calculate what China isn't reporting? Like, what's the methodology here?
Well, it's very difficult. They're just speculating a lot. Like one of them is this data here about UK exports to China reported, but you know, like the PBOC is only reporting this amount of gold, but in the UK we're exporting a lot more gold to China. So it's like yeah, and especially since 2022, which was when the war in Ukraine started. Well, not the war, because the war started in 2014, but like when Russia got involved. So I think that's the way they've been doing it.
Okay.
Sorry, but do you want to go ahead, Rafi?
No, no, yeah, go, go.
Um, I, I got a little calculation done here, and I was poking around the net a lot to try and find the answer. But it looks that the numbers which I came up with from various sources all add up to China having 7,000 tons of gold, which is about three times the officially announced reserves. And that comes from 25% of domestic production going into the China vaults, the net withdrawals from the Shanghai Stock Exchange, which is not going to the public at large, the subtracting the total consumption in China, which is 24,000 tons of private holdings going to jewelry. But I added all the numbers up and I came to a figure of 7,000 tons would be their current holdings compared with the 2,300 they claim. But one significant point to perhaps add fuel to the fire is the fact that China's foreign exchange reserves, the official reserves that they declare every month, have been broadly static since 2014. They plateaued, so they're going up and up every year after year. Their trade was going up. They had this huge surplus every year, so the reserves were going up every year until 2014, and yet they appeared to plateau according to the official numbers in 2014. Yet the trade and the surplus, the Chinese surplus, keeps going up year after year after year. So the question is,
Oh, so you're
how
saying they're
come?
spending it on gold? That's what you're saying?
Well, how come they're saying their reserves are not really increasing, yet they've still got a growing economy, growing trade surplus? Where's it all? Where's it all going? Well, it could be going into gold. We don't know, or
Hmm.
maybe they're throwing it away. I don't know.
Yeah. Carlos M3HN, thank you for your super chat. When do the non-depository financial institutions, NDFIs, get bailed out? And how many trillions? When do the NDFIs trigger crash? So NDFIs, for those of you who don't know, is basically the shadow banking system. I think I mean, their exposure is, I think, around 2.5 to 3 trillion dollars. I think all the loans and credit they've provided. I could be wrong, but I read about it and I've done some videos about it in the last 6 weeks because there's a lot of problems popping up with shadow banking, private equity, private credit. But one thing I would say is really difficult to know the exact amount, Carlos, because like in during the housing bubble, a lot of these institutions, what they do, they leverage, they create over-the-counter derivatives. So yeah, it will definitely be in the multiple trillions, and that's why I think the next round of QE will dwarf the previous QEs. Rafi, have you got an opinion on that?
On when the FDIC starts moving. I think a better question is when does the FDIC itself get bailed out? Because I think their coverage ratio is something like 1% or even less of all
But
deposits.
this is, sorry, it's not the FDIC, it's the NDFIs, which basically is like
Uh,
shadow banking.
okay, so institutions that hold on to cash that don't have banking licenses.
Well, it's like because of all the rules after the '08 crisis on the banks and regulations, a lot of the lending and credit has been provided now by hedge funds,
Right.
by private equity, and they're really opaque as well. And I think they have their exposure is in the multiple trillions. And we've recently seen some trouble, like with Tricolor and also First Brands, and they're all part of this shadow banking system. So he wants to know, yeah,
Hmm.
how much.
Okay, well, it depends what these shadow banks are primarily invested in. I think you can do a case by case search of the biggest hedge funds and what their big positions in. I think I just saw a tweet from somebody that was responding to me that actually Harvard University's endowment, and they could be part of the shadow
Yeah, well,
banking
they
and
are. Yeah, yeah,
yeah. So Harvard University is the biggest public disclosure in their endowment. Doesn't mean that's the biggest position. It's the biggest public position is Bitcoin. So that's where we are. Okay, well,
yeah,
that's just where
yeah.
we are.
Clive, have you got
Yeah.
an
Yeah,
opinion?
I think the problem with this is really private credit is what we're talking about. The biggest problem is fraud. And we've had some stories in the recent weeks of about the cracks emerging where people are making writing out fictive. It's not people, by the way. These are large institutions obtaining credit through fictitious invoicing, which is being financed by these private credit and shadow banks. But of course, at the end of the day, they borrowed their money from someone. They borrowed their money from banks. They borrowed their money from individuals, and the figure now is 1.5 trillion. Apparently, it's a huge number, and we don't know how much of that is real. But this is all when it's all shadow, it's done at a higher interest rate than normal banking. So when borrowers borrow this money, they might, let's say, there's less due diligence being done than should be done, and therefore the borrowers could be secretly using the money that they're borrowing for paying off their bank loans, patching operational losses, personal enrichment. But I think the real bottom line is how much of this shadow banking, the borrowers, is fraud, and I think that's the real problem.
Yeah.
The banks have got a lot of due diligence. The fraudsters are forced into this sort of area a lot more, so it's a lot riskier for the lenders.
Well, the whole financial system is a fraud, Clive.
Oh, is it? I didn't know that. Oh.
But you were asking about Bitcoin, Rafi. Here it is, 94,600. I mean, it doesn't look very good technically, but you never know. I think we could go and test here the breakout from it's around where is it? 74, 75,000. So yeah. Anyway,
Oh boy.
we got another super chat here. Let's see. Uh, Jace Little, I would love to hear how each of you structure your holdings and assets, a very basic percentage split. Well, we'll start with you, Rafi, if you don't mind.
Okay. Well, I have enough physical silver to last my family a year based on 1920s, 1930s prices of basic necessities. Um, Beyond that, I have some, maybe like 60% physical gold stored somewhere with different places with different vaults, different services, that kind of stuff. All physical, no unallocated stuff, and maybe 20-30% miners and streamers, and 5-6 per, like, in the single digits, somewhere in the low single digits, like options and more exotic bets, and in about 15-20% cash. Did I count over 100? It might not
Yeah,
be
we get,
exactly
yeah,
something like that,
yeah,
just something vague.
yeah. I mean, I'm pretty much similar to Rafi. So, what I guess my house is an asset as well. So if you add that as well, one thing I don't have is any debt. I mean, I have a car lease, which is, I guess, a debt, but I can always hand it in. I could actually pay it off as well. That's about it.
Oh,
But
I do have debt. I have my mortgage debt, but it's totally flat rate. I pay the same amount of shekels every month, nominal shekels. Say it doesn't change ever. So I have the bank where I want them, and
yeah,
you know.
I mean, I'm not diversified outside. I'm all into gold, silver, miners, physical, and nothing else really. I don't believe. I think someone said once, a famous investor, if you really believe in something, why diversify? So I diversified the miners, for example, but yeah, I'm not buying pharmaceuticals or stuff like that or other stuff. I know Clive is a bit more diversified, so I'll let him.
So I would say I'm certainly far more diversified than you guys, who are very for gold and silver focused. I guess I've probably got about 40 to 50% exposed to the stock market in various forms, excluding gold mining shares, which are another part. But I also have exposure to real estate through what they call real estate investment funds, and there's a lot of tax advantage products for if you do it right. I also have some exposure to special instruments, which are also tax advantaged, at least for Swiss investors. I'm here in Switzerland, which have a very high interest component along with a capital gains component. But of course, the possibility of loss too. You don't get high interest and capital gain without the risk of loss. And then when it comes down to gold and silver, I guess I'm up to about 25% exposure to that sector in general now. It was lower, but it's increased because of the rise in the gold price, the rise in the gold miners. And that would break down probably two-thirds exposure to gold, or maybe three. Let's do that. Let's do it. Four six. No, that's 4/7 exposure to gold, I suppose. 1/7 exposure to platinum, and the rest would be 2/7 exposed to silver. And then that's broken down between the miners, ETFs, which and then physical coins and physical bars. I've got it spread around in a lot of different ways. I know you guys would say everything's got to be physical, but there's a limit to how much you want to keep safely in the physical bars. And of course, there's a frictional cost every time you buy a physical one, whereas you keep it in a custodian, the frictional cost is a lot less. So that's why what I regard as physical, I'll keep forever, no matter what
Yeah,
happens. But if it's a gold miner or it's a gold in account or an ETF, that's something which I could sell, but I've never, to my knowledge, I've never sold any of it, and I've got no plans to sell it for the foreseeable future because I think it's the way of. I think the world is the money is going towards zero very soon, and that will hold its value. Now, of course, I realise the danger. Everybody says you might get to a point when you can't cash in your exchange traded fund because the government seizes it. Well, I'll take that chance.
yeah,
Yeah.
and also a lot of people talk about the Great Taking, and I'm aware of that. I mean, I covered it when it came out, that book a few years ago.
Mhm.
And the other risk is counterparty risk. The the gold and silver miners. I know some people say you got to take the certificates, but when you have the certificates, if you want to sell that stock, you got to send it back. It's a bit complicated. So it's a risk I'm willing to take right now to have those miners and the great taking. As far as physical, like Clive said, you can't it's risky to have it all in your possession. That's why I think it's here in the UK. I trust like gold investments. They have their own private vaults and they insure it for you. I don't trust the Royal Mint. And I don't trust the banks. Some banks are pushing you to buy their like how do you call them? The where you
Cu-
store.
cu- Custody arrangements
No,
or
they're like
customized?
I think Barclays and HSBC are pushing the service of what's it called? The storage in the bank and like the
Unallocated, are you talking about?
no, it's like it's just the word is it's really simple. It's just I've got it's like a box, a safety box, safety
Safety
deposit box.
deposit box.
They're
Okay.
selling that as if it is yours, but I can tell you if there's a banking
They'll
crisis,
seize it. They'll seize
they'll
it.
seize it. So I trust people more like gold investments because they're not a financial institution. But in Switzerland, though, I think where Clive is, it's a bit different. There's a lot of private banks that are not really lending money. They're managing people's assets, so they would be safer. But here in the UK, I don't see any safety in the banks. So yeah,
Yeah, we should distinguish between a private bank, a genuine private bank, and a bank which says we're doing private banking. So a private bank is typically owned by individuals. They take the customer's money and they do not do any commercial lending. You can't get a car loan, you can't get a mortgage, you can't get anything. Of course, if you're a customer and you have more money in the bank, let's say 120%, you could borrow 100, or if you have 100, you could borrow 80 or 70. Uh, so in a Swiss bank, every asset has what's called a loanable value. So equities would be typically 70%, gold would be typically 80 or 90%, a foreign currency like dollars might be 80 or 90%, a bond would be perhaps 70 or 80%, depending on which who the issuer was. And some emerging markets might be only down at 20%. So every asset you have in the bank, you take that asset multiplied by the loanable value, and it tells you how much the bank will lend you. But that's called secured lending. And if your borrowing goes above the loanable value of your portfolio, typically because your assets have gone down in value, the bank will ask you to sell your assets or force you to, depending on the situation, in order
Yes.
to repay the loan. So there's no risk to a bank. So private banking, they'll never lend anybody money on a credit card or a car loan or to buy an Xbox or anything like that. Whereas a commercial bank, which is the bank, the big clearing banks like Lloyds, Barclays, NatWest, Citi, JP Morgan, all these banks will lend money to people for their business ventures, for all kinds of things without security. They don't need
yeah,
security. They're relying on your cash flow, which obviously is not as secure as having somebody's money when
yeah,
you can't. So in a private bank, a real private bank, you can't. There's no risk of default unless there's a big
yeah.
fraud or something.
There's a Thanks, Clive. Jonathan Ventura, thank you for your super chat. What is the probability that the global float of silver can be? Hold on. This I got a problem here. I gotta refresh.
Uh-oh.
I can
No,
read the question.
yeah, no, I'm bringing it back up. It happens sometimes. I've got. Can you read it? Finish reading,
Yep.
Clive?
What are the probability? He says it in the singular. Um,
Yeah.
what are the probabilities? I guess it means that the global float of silver can be sucked into the LBMA and sent to China, India by next year. I don't really
Um,
understand the question. That doesn't make sense. I'll read it again. What are the probability that the global float of silver can be sucked into the LBMA and sent to China, India by next year? Well, I mean, I think what he's saying is, what is the gold and silver effectively being sent to China and India. Well, we know that the LBMA are sending out from the customs statistics, and that's not me seeing it firsthand, but reading this Jan Neuenberger, the one you mentioned earlier, Jan. We know that he's read the customs statistics, and there's a lot of 400-ounce bars going out in the direction of China. Not sure about India, I don't know.
Yeah. Rafi, have you got a view on that? Because there's been some tweets over the weekend about the fact that China is controlling the outflow of silver a lot more. Some people are saying that they've blocked the whole thing, but I don't think it's to that extent. So
No,
yeah,
from what I've seen with the silver numbers, I think the amount of silver at the Shanghai Exchange is like at a record low or 623 tons or something, a very low number.
yeah,
Um, so they're not controlling that, but the amount of gold in the Shanghai Exchange is at a record high.
yeah. So
So, but
I
then again, I wanted to just go
yeah,
over like this basic principle that it doesn't matter how much money China has. It's like China's not like a unit that we have to worry about. It's not, and even in a more general sense, it's not the amount of gold that a government has doesn't matter. It what matters is their ability to inflate. It's the ability to inflate that makes people poor. The fact that a government might have a lot of gold, if it has to spend that gold in order to get stuff that it wants, then that's fine. You know, they'll get stuff as long as they have gold, but whoever they're trading with will demand the actual gold in exchange for the stuff because they don't trust that country's currency, which they can no longer inflate because the inflationary system is dead, and that's why everyone's gone to metals, which is the money itself. So if they have to spend the gold in order to get stuff, well, that's fine because eventually they'll run out of gold, and then it'll be homogenized again, and then it'll be fine. So as long as no government can inflate, then nobody can get an unfair advantage, and then governments will just buy what they can until they reach a gold or silver level that they're
yeah.
comfortable with, and they don't want to go lower, and then we can get to an equilibrium again.
Yeah, so I searched today. China shut silver exports because yeah, like where is it? There's a this guy here. Latest update: Swiss expert on precious metals. China has pulled the trigger on silver. In China, you can only trade gold and silver futures if the metal is physically deposited. And it says this past Friday, the Chinese said no more deliveries. We're keeping our metal. I'm not too sure that's 100% right? Because I was looking here, they have put some limits on things, but it's not 100%. Let me see here. Yeah, here it says China has not completely shut down silver export, but has implemented stricter export licensing rules for 2026, 2027, adding it to a list of tightly controlled materials like rare earths. So yeah, I agree with that. I think don't know if you guys remember that Zoltan Pozar a few years, I think 3 years ago, he said that commodities are going to become a lot more important. Yeah, commodity nationalism, and I think it will because the world is fracturing. We don't, globalization's kind of splitting into blocks. So yeah, and I think I don't think the LBMA will be able to keep just trading paper. You know, people eventually will want the physical silver.
hmm
Yeah,
Has Zoltan said anything recently?
Zoltan, no, I haven't heard from him recently. No.
Ever since Credit Suisse went under, like he's been a nobody. Because he
Yeah,
worked
but
for them, remember?
he did used to work for them, but I think he left after they before just before they went bust. I don't know. Clive?
I was just going to say it's so silver's not banned from being exported from China, but it's got into the same category as rare metals. You need an export license to export it,
Yeah.
it kind of makes it slower. So it makes it slower and more difficult to get silver out of China if you need it.
Is that Chateau Lafite Rothschild wine there, Rafi?
No.
Is it Israeli wine?
Yeah. Yeah,
The, the,
it's like my nightcap, so I
all
like,
right,
go to
yeah.
sleep nice and calm
Oh,
without worrying about the end of the world.
Greg G4T with the oh yeah, this 50-year mortgage. He's saying with the 50-year mortgage, the banks will lose. Most houses built today will not last 60 years. The materials uses are so dang cheap that the floor shifts after 10 or 15 years. Well, I can say, Clive, that houses here in the UK are not, they last hundreds of years. My house is going to be 100 years in 2028.
Wow, happy birthday.
But the 50-year mortgage, I think that that's just a signal of the fact that they're worried about the debt-based system because they need to keep keep people in the hamster wheel. I mean, and the same thing happened in Japan. They even have a 100-year mortgage in Japan that you can pass on to your heirs. That's great, isn't it?
Oh my
Keep
God,
you
that sounds
Yeah.
enslaved.
horrible. It
I,
sounds so
Yeah.
bad.
the bad news for the borrowers is that they're going to be paying many multiples of the house price in interest alone over the 50-year life. But the good news is what they'll be paying in 50 years' time is going to be worth absolutely nothing in terms of today's money. So it's good news and bad news. But I think the real question is here: if you're borrowing at 6.5% in the United States, um, unless you can make on what you don't put into your mortgage, unless you can make a return of greater than 6.5 after all taxes, you're on a hiding to nothing. You're going backwards.
Yeah. Cool. What do you think of the idea of a 50-year mortgage, Rafi?
It's just the signal that we're getting deeper and deeper into the end game.
And
Because it's like Operation Twist. Remember Operation Twist when the Fed was like, we're gonna twist short-term assets to long-term assets to try to stimulate the economy. So you shift a 30-year mortgage into a 50-year mortgage to try to stimulate the housing market. It's the same principle. If you can draw out the debt over a longer period of time, you can lower the monthly payments, and then the idea is you have to earn less money to keep paying your mortgage, so you can stay in debt longer. Um, you know, uh, if we get to 50 years, if these things actually happen, and uh, I'm a spiritual guy in this sense that once you get to 50, 50 is the number of debt jubilee. That's the
oh yeah,
end.
that's the
Every 50 years there's in the biblical system there's like debt is erased. So you can't get past 50 and not at least not in the Judeo-Christian tradition. It's done. So
yeah.
that's the bell. Let it
Yeah.
ring.
Yeah, Dutch libertarian says the biggest and the best miner is the USA into debt. Not sure what that means. David James Flood, regarding concerns of seizure of securities, one can create a trust, deposit securities into a separate personal legal ownership whilst maintaining beneficiaries status. Yeah, I mean, trusts are interesting. I mean, I'm not an accountant, but the problem about taking your securities from the broker is that if you were wanted to sell them, you'd have to, I think, transfer it back to the broker. That's the only problem. How easy it is, Clive, in Switzerland to have your stock certificates.
Well, we used to when I started in Switzerland 40 years ago. But to be honest, I haven't seen a stock certificate in decades. It's just it would be first of all, if you tried to do it, it's not illegal, but if you tried to do it, it'd become very complex dealing with the purchase or sale because moving it around, they're going to charge you special fees. So I don't think anybody I don't know of anybody who's doing it these days. But when I started, you used to have the paper certificate with the coupons, and you'd click, and people would come in clipping the coupons and hand them in at the cashier to get the money.
Yeah, I've got here German Government International Loan 1930. Um, and principal, yeah, it was like led by JP Morgan and some other banks. And it's got all the coupons. They were clipped until May 1945, and it was a 35-year bond from
Mm.
1930. So that's how they used to do it.
Mario,
Guaran-
your house
who,
is practically a museum. You could like have little
who,
exhibits in your house of
who's
Mario.
who guaranteed that
I
bond, Mario?
I bought it on eBay. Anyway, who guaranteed it? Let's see. I think it was JP Morgan, First National Bank of the City of New York. That's Citibank. And well, the it was the German government. That's why they basically I think JP Morgan and Citi lent the money to Germany, and then they kept paying the investors uh, until May 1945, and when Germany lost, they just defaulted. And they also defaulted, I think, in 1933 because this used to be paid in gold. But with with the Executive Order 6102, they only got paper money. So there you go. I mean, it's not worth the paper it's printed on. It's counterparty risk. But like, yeah, I think unfortunately with the securities, we just have to take the risk. And I think, yeah, it's difficult to time it. A lot of people think, well, by the time when things get really bad, I'll sell my shares and then take the cash and buy physical gold. But
Will be available.
yeah, when things kick off, the time to do it is before it all really, I don't know, it's tough. Maybe I took a little bit of profit on my miners a few months ago, and
I got rid of all of my leverage funds, is what I did.
yeah,
Yeah.
yeah, yeah,
Well, I've never, to my knowledge, I've never sold anything related to gold or silver yet. I
yeah.
guess the day could come, but I can't see that. What am I going to do? Put it back into cash, and then what?
No, you could put it back and buy some coins.
Well, yeah, but
Yeah,
that's kind of going backwards and forwards in the same direction. I might as well keep what I got in terms of
yeah.
a gold certificate or a gold
Felix,
miner.
Felix the Cat 69 is saying, tell Clive that Munger said diversification is for the ignorant. Oh yeah, that was the guy. Yeah, Peter Lynch called it diversification.
Okay, well, I'm gonna say, he is right depending on your age. So I always say that if you're young and you have a conviction idea, you should bet everything you've got on it if you're young. But once you get to a certain age and retired, you don't and you get it wrong, you don't get a second chance.
Yeah,
And as
that's
as
right.
you're not going to get a second chance, you have to diversify in case one of your bets goes wrong and you still have some things left.
Yeah, because even if you're right, you still need a large time horizon, which you don't really
Yeah,
have when you're older. That's just
that's right.
the
Yeah.
reality of things.
Rafi, I saw that you were making some comments on X about Bitcoin. So Steve Montplaisir says Bitcoin is simply a greater fool item. Would you like to maybe give us your opinion on that?
Well, it might be that I'm seeing the end game get really, really close, and I see the collapse of Bitcoin as a big step towards the end of it all. Because when it does fall, let's say if Bitcoin falls down to like, five, $10,000 area, there's going to be a lot of huge parties or huge financial institutions that are they're going to fall over. It just mentioned Harvard, the biggest public position of their endowment is Bitcoin. I mean, it's gonna be catastrophic. But what I keep coming back to is as much as I was excited by Bitcoin because I come from a libertarian space and post 2008 and Bitcoin is an interesting idea, it's still not a thing. Like no matter what they say, I say what is the thing, the what is a bit not the Bitcoin network. A Bitcoin network is a network to trade Bitcoin or to divide titles of Bitcoin. Like what is the thing, the Bitcoin? What is it? And
Well, they'll say it's a mathematical formula
okay, it's a
that you have to solve, but yeah, what good does
what do
it
you
do?
get when you solve it? You get
Yeah,
another Bitcoin or another piece of Bitcoin. But what
yeah,
is
yeah,
that? It
yeah.
like there's no everything falls in on itself because there's nothing. there? And no one can answer that question. So when they say, "Oh, it's a network, it's a this, it's a network of nothing, it's a this of nothing, it's a fungible of nothing," they can't fill it with anything, and that is the basic problem. Like you have all these aspects of what sound money could be: fungible, divisible, uniform, whatever. All the stuff that gold is, except that gold is a thing and Bitcoin is not a thing.
Yeah.
You come back to that and they can't answer the question.
Yeah. Clive, there's someone here saying that uh, SQ7944 says Mr. Thompson needs to plan until his 90s. He's going to have a long life. There you go.
Well, that comes back to the mortgage thing. How long do we get mortgages for in Switzerland? They're lifetime mortgages. So by the time you reach retirement age, you're expected to have repaid 33 and a third of your house value. In other words, your mortgage should not exceed 66% of your house value. But after that, you can keep it fixed at that, and therefore it becomes a lifetime mortgage. And I have to say, I'd be very upset if some bank said to me, you can only have your mortgage for another 50 years. Well, in my case, it wouldn't matter. But if I was a lot younger, they said you could only have a mortgage for 50 years. I'd be kind of upset. I'd be saying, well, why can't I have a lifetime mortgage? Why should I repay you at all? If I'm paying you the interest, why do you care?
It's like the British did in the 19th century with the perpetual or consols. They're perpetual bonds. Yeah.
Yeah, I mean, at the end of the day, what does it matter if you die with a house worth 1 million and a mortgage worth 600,000 or whatever? I don't see the problem. Of course, we do have people in Switzerland here who sometimes get to elderly age and they can't pay the mortgage interest anymore. But then we have a concept known as viager, which is it's also very common in France, which is where someone can buy your house at a discount, but you're allowed to live in that home for the rest of your life. It's a bit like in England, we call it perhaps a life interest. But you can live in the home until for the rest of your life, but the buyer becomes the legal owner of your house, but he can't kick you out, and you're not allowed to sort of bring tenants or
Yeah.
relatives in. So,
I
so
was
there's
reading,
there's a solution.
yeah, I was reading that in the US now, reverse mortgages are like catching on again with people over 60, which reverse mortgage is just people taking equity out of their house and getting cash.
Mhm.
So that's a sign that things are getting worse for the people, the retired people on pensions. Someone's saying, who is Satoshi? Well, I don't think Bitcoin, the Bitcoin blueprint was written by just one person. I think it was a committee of loads of people. So I think that's just a cover. I saw that there's some emails and some stuff that's come out about Jeffrey Epstein, and apparently he was involved with MIT and Bitcoin. So I don't know. That sounds interesting. And Durarama is saying Frank Juster said in a recent interview that the owners of Tether know they will be taken over by authorities. It's only a matter of time. Yeah, Tether, I mean, that's an interesting stable coin. They used to say that they were one-to-one backed by the dollar, but they have a lot of securities that like they're not cash. So, I mean, Tether one day could be in trouble. Rafi,
Yeah, nothing is one to one.
yeah,
That's all.
Yeah, sorry, Rafi,
Yeah.
go ahead.
Yeah, no, that's all I want to say. Nothing is one. When anyone says it's one to one, it's not one to one. There's no profitability in one to one. Everything is fractional.
yeah. Someone's saying here that the CIA drew up Bitcoin. It's possible. I would say it could be DARPA. It's something even deeper. DARPA. Yeah, but I think intelligence is definitely involved. And looking back now, I remember the guy who helped develop Steam, Clive, that his name was, forgot his name, but at one point he came out and did a video with his dad and they were all from like Virginia, near Washington, D.C. His dad had worked for like a big defense contractor, and yeah, I'm not too sure about Bitcoin. I think there's
Um, I, I think that probably the Bitcoin white paper, was authored by an individual, but the reason he used the name Satoshi Nakamoto as opposed to his real name was because the reality is he was part of a group of many people who contributed to the invention of Bitcoin. And if he had used his own name, he would have been taking the glory for the hard work done by many other people who were developers on what then
yeah.
became Bitcoin. So by assuming a third identity and still being part of the group, he could write the white paper whilst at the same time not having everyone say, "Hey, you've just stolen my idea."
Yeah, I mean, I know a guy who worked for the regulator in the UK. He's contacted me and he said he was hearing about Bitcoin in 2003. And then they were told at the regulator here by the SEC to shut up about Bitcoin in 2003. So not 2008 or 9. But anyway, I think, yeah, we've gone past the hour here. We'll end as usual, Rafi, if you don't mind. Any final words? What do you think is the most important thing right now for people to focus on financially? And if you want to talk about any other aspects, go ahead as well.
I'd say get your team together because I think we have a few months before things go down. Meaning get to know your neighbors, be nice to them, and get out of the big cities. I hope that you live in a small suburb of London. I don't know exactly where you live, but I I hope you're safe there. I think Switzerland will be okay relative. London, it depends on the neighborhood. I don't know. I wish you all some safety. I don't think we have much time left.
Clive, what about you? What do you think is important at the moment?
Well, I'd like to second everything that Rafi said, but keep your options open. I still stand by my view that you should be diversified and not have all your eggs in the one basket if you're elderly, but if you're young, bet the house on what you think is going to be good. And be prepared for the worst. So, if you have a cellar or a bomb shelter like we have in Switzerland, make sure it's got lots of wine in it.
Yeah, that's not a bad idea. And for me, I mean, I'll second Rafi too. And yeah, the other thing I would add is yeah, don't be scared. And I actually think when it does happen, a total implosion of the system, and I think the West is gonna it's coming down just like the Eastern Bloc did with the fall of the Soviet Union, and it's going to be very disruptive in the short term, maybe the 10 years after that. But then we're going to have a renaissance,
Yeah.
and so I'm optimistic about things. I
Yeah,
know
I
I'm
think we're all optimistic. All of
yeah.
us are
Yeah,
optimistic.
so that's what I would say. And yeah, like Rafi said, I've spoken to people that have experienced hyperinflation. They said the most important thing is to be in good stead with your community and neighbors. So yeah, I'll that's right, Rafi. And with that, we're gonna end here. And thank you all for being here. And the live stream. Okay. All right. Okay.